Hello my fellow board gamers, welcome to the channel. Today I bring you an overview of a classic manager. We've got the designers there and it's brought to you by these guys at the bottom. Now if you're after a run through, check out the video I'll be bringing you next week. So it's 3 to 6 players, takes anywhere from 60 minutes up to 120. It's a lower complexity. Now in this one we are managing directors, folks. Our shareholders have trust in us that we are going to invest in machinery which will be worth value at the end of the game. Maybe we will profit from selling and buying shares, but the gist of this game is about getting the right prices to sell the products we are making. And there's one generic product, we're all competing over prices, and then we'll have a chance to buy shares. The stock market's going to be influenced, and at the end of the game you will sell your machinery at 5,000 each, and it costs you 5,000 anyway, and the game will only be triggered once one player has actually put 10 machinery onto their board. So that will trigger the game, and doesn't necessarily mean you're going to win it, because other players may have made their fortune through the stock markets. So you're going to add up all your machinery at 5,000 each. Let's say you filled all 10, that's 50k. If you've made any profits or any cash in hand, you're going to add on that, and you will then sell all your shares of your company, everyone's company, at the current market price. Whoever has the most money will be the winner. Okay, so the first phase then is pricing. We will be secretly and simultaneously using these rondels here to select our price. Boom, you're going to reveal them, and whoever set the lowest price for your products as a company has definitely sold it. And this is the price you sold it for, 7,700. But you are going to have to take off in the next phase the salary, the wages you're paying, which is say 5,000 here. So you would be making a profit of 2,700. But there's a twist. It depends on all of the prices that everyone has revealed. So let's assume that yellows here have gone for 7,500. They are the lowest price in the market. The next player has gone for 7,700. Now, that is fine. They are able to participate in selling their product because there is 1,000 difference allowed. So if they had been priced at 8,600, they would be beyond that 1,000 range, and they have overpriced their product for the market. People aren't interested. They don't want to buy it. So you have been outpriced and you don't participate. And everyone then else, even if they're within range, so these guys, 8,600, so they are within that 1,000 range from this player, because it'd be up to what, 8,700, they still don't have a chance to participate because the first player above, so the next bid price, the next product price, is beyond this. So let's say these guys, if I can manage this with one hand, let's say they went in at a ludicrously low price. Oh my days, I can't do all this with one hand. Let's say they went in at 4,500. So we look at 1,000 difference. Boom, they're way overpriced. It's 7,700, so they're not participating, which means this player is not participating. Now, if they were in range, which they were, then these guys get to participate. Then are the next people 1,000 within range? Yes, they are, 8,600. So everyone is able to sell their products. So you go to the next phase, which is figuring out how much profit you've made. So let's say that was what, 7,500, I think it was, minus your labor cost at 5,000, because you start with no machines. So they have made a profit of, what was it, 2,500. Boom, you take that cash. These guys have made 2,700, so slightly more, and they're in range, so that's fine. These guys have made a whopping 3,600. Now, the next phase is you're going to influence and fluctuate the prices. So whoever sold the product the cheapest, which was yellows in this case, they've sold it at the cheapest, they've guaranteed to sell it, but their shareholders are like, okay, you've not made us the most profit, so their share price stays the same. Here, 1,000, and you all start off at 1,000 to begin with. The next player, if they actually met the criteria and were in that 1,000 and they managed to sell their product, will go up 1. So that was green in this case, so they'd go up 1. Reds, they were able to participate. They were 1,000 in range from the player before them, so they would go up 2. Now, if you were playing a 4-5 player game, the next player, if they were in range, they would go at 3 and so on. And it only ever goes up a max of 3. So the player after that, if they were in range as well, would go at 3. Now, if you were out of range and you priced your product, let's say, you went for 10,600 or something crazy, and you were out of that 1,000 range, you will not have to pay the labor cost because you've not sold your product. So you're not attaining any profit. You've sold no products. You don't have to pay any salaries. And when it comes to the fluctuation of your prices, your shareholders were not happy with you, folks. You generated no revenue. Your stock price will go down. So red, in that case, would have gone down 1. So that's the fluctuation. Now, the last phase is you get an opportunity, starting with whoever had the lowest price, to buy a combination of machines. You can buy and sell as many shares as you want at the current stock market price. So maybe you buy one machine, it's going to cost you 5,000. You plonk this here, and now you can see your labor costs are 4,500 on future rounds. You could equally sell this for 5,000. So it's always 5,000. So you've got a bit of fluctuation there. Maybe we bought that for 5,000, spent some of our capital. We're getting slightly closer. Well, 9 more to finish the game. We maybe want to sell one of these green shares here. We're going to get a price of 1,200. Maybe we want to then spend that straight away and get a few more yellows. We have faith in our own capabilities. Now, the absolute crux of this game is the pricing, folks, of your products, and it's very tricky to begin with. You have no idea what everyone else is going to go for, but before long you kind of all roughly gauge the range, and maybe someone has managed to invest in loads of machinery. They have got, say, a labor bill of 3,500, so they've got more flexibility to offer reduced prices, which is a nightmare for everyone else, because if they're not within that 1,000 range, they ain't selling products. And maybe someone just goes, right, I really want to mess up the markets this round. I'm going to go for £1,000 offer. You can go all the way from 100 up to 20,000. And even though their labor cost is, say, 4,500, and they've gone for 1,000 as a price, you can still do that. It's just the difference is 3,500, and you are paying that to the bank. I probably wouldn't recommend it. And equally, your stock value would stay the same, but everyone else, because they didn't sell, would go down in value by 1. So all sorts of things to think about, and you literally keep playing out. You're going to be picking your prices, determining whether you can sell your product. You're going to reduce on the next phase your salary to see what your profits are. You are then going to fluctuate the prices depending if you were the cheapest, all the way up to participation and moving it up to free spots. You're then going to buy and sell your machines and your stocks, and eventually when one of you triggers the game end with 10 machines out there, you're going to sell all that capital at 5,000 each, so it keeps its value. You can add up any money you've made profit throughout the game, sell all your shares. Whoever has the most money is the best and the winner of this game. You've done your shareholders proud as the managing director. There we are. If you find a copy of this, folks, give it a go. It's an absolute beautiful game, this one. Enjoy.